Welcome to the CLA Insurance webinar. My name is Esther Kane and I head up the CLA's Insurance Division. During our webinar today, we're going to be taking you through some key insurance topics. The first segment will be delivered by my colleague Freddie Braithwickslee. Freddie will take you through the important insurance factors to consider when diversifying your farm or your estate. Then we're going to move on to the topic of cybersecurity, which is going to be delivered by another colleague, Catherine Brown, who heads up the Howden Broking Group cyber team. Catherine will give you some insight into the risks to be aware of and how you can better protect yourself and your business. And then the final segment of the webinar will be delivered by Adam Swinburne, who is a Divisional Director of Howden Broking Group's Financial Lines team. Adam's going to talk to you about Directors and Officers Insurance. He'll explain exactly what that is, what risk it covers, who needs this type of cover, and why you should consider this type of insurance protection. Then at the end, we'll be answering questions that have been pre-submitted to us. And of course, should you have any additional questions when watching this webinar, please do get in touch with myself or any of the team. Thank you, and I'll hand you over to Freddie Braithwickslee.
Thank you, Esther. Now you should have a picture of me. There we go. Yes, my name is Freddie Braithwickslee. I work for the CLA Insurance and have done for a few years now. I didn't actually always start as an insurance broker. I've previously qualified as a professional rural surveyor, so I've sat through my fair share of diversification webinars or seminars. So with that in mind, I don't intend this to be another presentation on all the ways there are to diversify out there for your farms and estates. I'm merely trying to create a bit of a prompt, a reminder of what there is to consider when you are diversifying. I'll propose lots of hypothetical questions, and I intentionally won't answer nearly all of them. The idea is that you come to us afterwards and ask us some questions. It's to get you thinking in the right way. So with that, let's look at what our sort of typical farm and estate client looks like, as if there was a typical farm or estate. You're going to have the main house. You might have some contents and some valuables to insure. There might be some cottages, be them occupied by farm tenants or by just AST tenancies. Farm buildings, the land, obviously, your farming operation, be that arable or livestock, your machinery and tools, and then your vehicles as well. And with that goes the corresponding insurance, all of which we're able to accommodate. So you have your buildings insurance, your contents and valuables. And if you've got valuables of a certain size or portion, then you might want to consider a high net worth wording, which is something we can accommodate also. Personal lines, your liabilities, which become increasingly more important with changes in things like the Ogden rates. We won't go too much into that now, though, because I think it's a webinar in itself. But public liability, employers' liability, and actually even more importantly now, I want to say more importantly, very important now, environmental liability as we move to a greener future. Business interruption, machinery and tools, and your motor and trailed equipment as well. Now, with the exception of motor and trailed equipment, which is nearly always insured separately, we can accommodate everything else there on one farm and estate product. And what the CLA have done is create that product with AGEAS, called the Land and Estate Product, and it can accommodate all farms of all sizes, from small hobby farming right the way through to great large-scale commercial farming and or in large property portfolios and estates. So, having flagged what we think of as a typical farm, we better consider what diversification is. It's been a buzzword ever since I studied at the Agricultural College, and continues to be of enormous importance in the rural world. And I think as we return to a new normal following COVID, inevitably there'll be more diversification in the bid to bolster incomes and ensure sustainability. But what is it? Well, in an insurance context only, it's change. However, diversification is change. In essence, any diversification away from what is previously been done, anything that's away from the normal. You have a duty to make a fair presentation of your farm and to an estate, to an insurer, and the duty is not only that so that we as brokers can make sure that the existing cover is suitable, but also that we can present the best options of cover and consider other exposures that you should be insured against. So with that in mind, let's have a look at what change I'm getting at through a couple of worked examples. The first of which I've looked at is farm buildings to office use, change of use essentially. And whilst these are pertinent to farm buildings, they really are relevant to all change of use scenarios. So in converting your farm building to an office let, for example, have you changed the sum insured, the cost in which it would be to replace that building? Are you now charging a rental income? Should you be insuring that rental income? Has the time required to replace that building changed as well? If you were to lose that building now, would you be able to replace the building and get a new tenant in just say 12 months? Or do you need 18-month cover or 24-month cover? Have you changed their insuring responsibilities? Have you put them upon the tenant, or are you now responsible just for the building itself, or is there a split insuring responsibilities? And I flagged also here services provided. Are you putting an increased strain on the water, the electricity, or the heating? Is the tenant providing that? Have you carried out electrical inspections for commercial properties that were once agricultural properties? These are all things to consider. So let's look at another one. Services and renewables. Solar schemes, wind turbines, battery storage, anaerobic digesters, private water supplies. These are all things we come across on farms and estates. Are you building them yourself? And if so, do you have cover for the building work? Have you got a contractors all risk policy, or have you contracted that out and the contractors themselves have their own cover? Are you responsible for the ongoing management? At what point do you take control of it again after the building work started or completed? Are you responsible for ongoing supply? Picture this example, for an instance, if you've created an electricity supply to a number of units and that power supply goes down, are you responsible for the loss of those third parties? Business interruption for their earnings, essentially. I can't answer that question. I haven't had to look at your policy, but these are all things to consider. And the good thing about these larger scale projects we've just discussed is they are just that, they're large scale and they tend to be well thought out. And the topic of insurance is usually part of that development. However, diversification is not just the big change. It's all forms of changes require some action, so large and small. So consider these as we go through them, and whether you think there's been a change in the risk itself, and whether the standard cover would extend to cover you. Spraying a neighbour's fields. You'd be covered for spraying your own fields, but are you covered for spraying neighbour's fields, contract farming, for crop damage to a third party? Or if you're moving machinery around for a neighbour, have you converted a residential property to a holiday let? The residential rent might automatically be insured, but if it becomes a holiday let and a commercial property, you might need to insure the income separately. Are there additional liabilities involved? DIY liveries is another common one we come across, where the livery has developed from DIY into part livery or full livery, where the farmer is lending a hand in some capacity. Do you provide lunch at let shoes, or are paying guests staying in the house? Do the public visit the grounds? Do they come inside the house? Do they have access to the house? And changing an IT system is an interesting one, as we all now work from home. Are you working on the cloud, or are you still using paper files? And is there a chance of a cyber liability claim? Something we'll talk about later, or Catherine will talk about shortly. They're all things to consider. And why is it so important? Well, as we've said already, you have a duty to make a fair presentation to the insurer. I've mentioned coronavirus once. I've got away with only mentioning it once so far, but coronavirus is putting increasing pressure on insurers to review their policy wordings and what covers they extend underneath that. And it's important for you to be aware of exactly what you're covered for and what you're not covered for, and that's conditions and exclusions. Have a gaps in cover being created by making these changes, and who is responsible for insuring them? Which brings me on to the big question that I'd like to pose here. Do you know everything? Should you know everything? It's one of the biggest lessons I learned when I first qualified as a surveyor. The difference in the two questions is one word, but the consequences of not recognising it can be huge. As farmers or rural business owners, you're not expected to know everything about insurance. And that's why we're here. As brokers, we're here to work with you. I think it's sometimes forgotten that we're not just here to sell you something, but you should always remember that you are the broker's client and the broker is acting in your best interest. As such, pick up the phone to us. Email us or arrange a Zoom meeting and involve us in the conversation, no matter how large or small, weird or wacky, because once you put it on our desk, it becomes our responsibility, within reason. I'd like to let holiday tenants use my swimming pool. I'd like to sell homemade jam from the shed. I'd like to build a golf course. I'm thinking of creating a zoo. Am I covered if I use my drive as a landing strip for my guests? I flagged these not least of all because they're questions that have been raised to us before, but also because they're true. We're also professionals, and sometimes our clients expect us to know something, the answers to everything, and sometimes we don't. But one of the bonuses of dealing with CLA Insurance is our scale. CLA Insurance forms part of the Howden Group, who employ more than 5,000 specialist brokers. And between us, we have the capabilities just to explore just about any cover. So whilst your initial question might be raised eyebrows, we're able to find the expertise that can advise on what cover there is, perhaps isn't available. So the key takeaways from all of this: diversification is change, and where there is change, there may be a change in the cover required. A broker works for you, so keep them involved and updated. And communication is key to ensuring our clients are covered as they should be, and that you don't have any gaps in cover at all. I can now hand you over to Catherine to talk about your cyber insurance.
So thank you, Freddie, and hello everyone. I'm Catherine Brown and I specialise in cyber and technology risk at Howden. So jumping straight in, we are aware that for many, cyber is considered a very complex issue, but in its basic form, if you use technology and network, hold information, and have a connection to the internet, then you have a risk. According to the Allianz Risk Survey for 2021, cyber incidents are now ranked the #3 business risk, slipping from #1 last year, back behind, as you may have expected given the current situation, business interruption taking top spot and pandemic outbreak, unsurprisingly moving from 17th to 2nd. By comparison, 7 years ago, cyber ranked 15th in the risk survey, showing the growth of cyber risk awareness during the digital transformation period that we are now navigating. What we know is that cyber risk to a business can have a critical impact on operational performance, financials and reputation. And we also know that attacks are becoming more and more sophisticated and significant in their severity and frequency. So what are the threats? Cyber threats can take many forms, from the external of organised crime groups such as the gang that were responsible for Grand Crab ransomware, who boasted their ability to retire after only 18 months of operating, having made and laundered more than 1.5 billion. To foreign governments or nation states, activists or hacktivists as they're called in the cyber world, with their own agendas, and then individual hackers of varying degrees of expertise testing their skills, causing disruption for fun. The threats then move to the internal, and sometimes the least considered, of malicious insiders, which could be a disgruntled employee that you are not even aware of, and which can also be one of the hardest to detect, as they already have access to your data and systems. They could be compromising data or providing trade secrets to competitors. An example of this is the high-profile case of the senior IT auditor of Morrison's that, following an unrelated disciplinary action, decided to download the payroll of 100,000 Morrison employees onto a USB stick and then upload onto a public website in 2014. So you may have also seen in the news recently that an employee of Tesla was offered a $1 million bribe from a Russian hacker to help them install malware into the Tesla network. This shows how tactics of threat actors continue to evolve. Breaches and incidents don't only stem from malicious insiders, they also occur due to honest employee mistakes. Even with the best intentions, spreadsheets and information can be sent or given to the wrong or malicious recipients, and cybersecurity tools can't protect against all human error. In 2019, human error was responsible for 90% of UK's cyber data breaches. In many claims that we're seeing during this current period, business email compromise, phishing scams, and ransomware are the most common being received. Ransomware is where malicious software locks you out of your systems and in some cases your backups too, until a ransom is paid. This can be introduced to your system easily by clicking links in emails, infected attachments, accidentally visiting malicious websites, social media messages, updated, unpatched software, and so on and so on. Ransomware incidents accounted for 41% of cyber insurance claims filed in the first 6 months of 2020. This is a business for cyber criminals, and they have the time and funds to be creative, resulting in an increase now in a evolved ransomware termed double extortion ransomware. This is an attack that not only sees them encrypt data and demand a ransom from the victim in order to regain access, but also steal and threaten to upload their data online. These attacks have become popular because they are the simplest way for hackers to make a profit. With double extortion attacks, even if a backup is available, the attackers can put more pressure on the victim to pay a ransom. The increased pressure comes from the potential serious consequences of a data leak, both financially and reputationally. For social engineering, these techniques are used to manipulate someone into providing confidential information. For example, login credentials to access the network, or take other actions that bypass normal security to help attackers commit theft or fraud. In some cases, by creating a sense of urgency, the intentionally misleading someone, for example, by email, telephone, or text, it can result even in bank accounts being compromised. Cybercriminals have been going to great lengths throughout 2020, and the arrival of the global pandemic provided cybercriminals with the perfect cover for ramping up email attacks. Coinciding with the increase in remote working, global data has shown that employees have been more likely to fall for social engineering scams. And to be completely honest, they are getting harder and harder to spot in some cases, pandemic or not. A large proportion of social engineering attacks result in business email compromise, where the cybercriminal gains access to an email account. This then leads to potential privacy issues by way of compromised data held within the employee's email, which may be a notifiable incident to the Information Commissioner's Office due to data protection, but also to theft of funds, for example, through fraudulent payment instructions, both internally and externally to your clients, vendors, or accounts departments. Cybercriminals are very good at being patient and waiting for the right time. For example, you receive an email from what you think is a supplier or even a contractor for a new project. You are expecting an invoice and it all looks legitimate on headed paper, but emails have been intercepted and bank details have been changed. Your account settled the invoice and only realised that it was fraudulent when your supplier chases for non-payment. Your funds are gone and your bill remains unpaid. With business email compromise, if they don't sit and wait watching your inbox for opportunity, they may send multiple emails to your contacts from your account, trying to again obtain login credentials and infect other systems in order to attack or commit further theft or fraud. Employees are typically the first line of defence, but it can be difficult when you're a constant target of the various threat actors. This is why staff awareness and training is so vital as part of the management of cyber risk. Many business email compromises could be avoided by having multi-factor authentication, and it is strongly recommended, and in many cases not too difficult to implement. Although many business email compromises occur due to phishing, you would be surprised how many still occur due to poor passwords too. Here we show the National Cybersecurity's top 20 most common passwords. If you see your password in this list, we would suggest that you strongly consider changing it. We know it's difficult, but we must stress the importance of strong passwords and not using the same one for multiple accounts, as if your Fitness Pal app, for example, is compromised, which they have been. They have just found their way into everything to do with you personally and professionally, as you can see from the illustration on screen. Your social media can divulge a lot about you, which can make being compromised feel so legitimate to others. Knowing your children's names, teams you support, where you work, when and where you are on holiday, and so on. Cyber criminals can gather a lot of information about us very quickly. This is a chart by iNet Solution that highlights the time taken by software robots to decode your password. As you can see, it certainly makes light work of many, especially when only using short, simple combinations. At the bottom of the chart, I've included a website where you can check if your accounts associated with your email have been compromised. Alternatively, you can just type into Google have I been pawned with the spelling PWNED. It can make for very interesting viewing. So we know that technology and data is everywhere in our personal and business lives, from how you access medical care now to getting on a plane for your holidays or not, as the case may be currently, to sending emails, using social media, adjusting your heating or printing and copying documents. We are inherently reliant on technology to get through our day. Disruption to any of this can have a substantial impact. In business, we have a duty for many things, and privacy and security is something, given GDPR, that must have due care and attention to ensure that compliance can be achieved. But not only this, clients are getting more savvy to where their information and data is being held or used and want more reassurance. Paying more attention to the security of your systems, data and recovery could also increase your trust with clients and give you a competitive advantage. Given the tough circumstances for many during this period, resilience has become a major focus, and the ability to withstand, absorb, recover from a cyber attack must be a risk that is carefully considered and managed. Where Freddie has touched upon diversification, it opens up opportunity, but this can also increase risk that needs to be managed. If you hold data for tenants, event clients, or even for memberships, then you are the data controller and have the responsibility under GDPR, regardless of whether the information is stored on your network or in the cloud. This could result in not only reputational damage, but large financial implications with third-party litigation claims against you for compensation for privacy breaches. In some cases, people are terming this the new PPI. Farm shop, for example, selling produce and having tea rooms using point-of-sale machines. If third-party card data is compromised, then you can face fines from the card issuers under the payment card industry data security standards also. Would revenues of your business be impacted if you suffered a ransomware attack and weren't able to access any files, emails, or even your phones? Given the increase in ransomware that we have mentioned previously and the average six-figure demands now, could your business withstand such an outlay or even know what to do? Where cyber insurance was initially created focusing on third-party liability aspects of privacy issues, what was quickly realised is that, in fact, it is the first-party costs, so your own costs, that are representing the larger element of losses. And this is where cyber insurance has evolved and can assist. A cyber insurance policy does not mean that you won't be attacked or experience an issue, but what it does mean is that you'll have the critical assistance to help you remove the threat and recover operationally and financially in the aftermath. The key differentiator of a cyber insurance policy from a traditional insurance policy is that it's service-led. If you're experiencing an issue, the invaluable assistance of a dedicated, experienced, and emphasis on experienced incident response team, providing IT forensics, legal, and PR assistance can make a huge difference during a high-stress and time-critical event. These specialists are experts, have experience in negotiating ransoms, and have the ability to pay as a very last resort if law allows. In the cryptocurrencies that are required, have many people really got access to Bitcoin, for example? This in turn reduces the impact of business interruption and reputational damage from clients, tenants, vendors, and so on, even regulatory implications or investigations. Knowing that you have the response plan in place and dealt with the issue in a timely, compliant manner, all of which a quality cyber policy would be able to provide you assistance for. So I'll wrap up by saying each individual business has its own unique exposure, whether it's critical, specific, or seasonal elements of business, data, reputation, or a combination of things. If technology and data is used, then the risk is real, regardless of the size of operation. I'll now pass you over to Adam Swinburne.
Hello, everyone. Thank you very much for joining me today. I am Adam Swinburne. I am head of the management liability team here at Howden, and I'm here today to guide you through a brief overview of what is Directors and Officers Liability Insurance and Trustee Indemnity Insurance. Just to give you a brief overview of myself initially, I have been in the market for just over 25 years, with 3.5 years at Howden, handling this class of business throughout my career. So, without further ado, I'm going to move on to my first slide. So, management liability insurance is an extremely important insurance for any director, officer, trustee, member, partners, and employee of a firm, as it is there to provide financial protection to those individuals from an investigation and or a claim alleging a wrongful act, and they can come from various sources. Now, I will show you in a few moments of where these claims or investigations can come from, but a wrongful act could be defined as an act, error, or omission committed or allegedly committed by these individuals, which are classed as insured persons, that stem from a management type decision that is made at the company. The policy is not there to pick up a professional liability claim to a client, and this type of policy is there to cover claims or investigations following a management type decision. It is key to understand that. Now, the policy will look to pay for the defence costs and certain damages from a covered claim or investigation. So, what I'm looking to show you here are the types of positions within a company, partnership, or trust that are at risk from a management liability claim. You'll see that this is rather broad, and it is important to ensure that the definition of insured persons covers all of these individuals working within the trust and company that you as a buyer wish to protect. As you can see, I've detailed here employees of the company, and also managers are mentioned in the list. And the driver behind this is you tend to find managers or employees, or both, potentially being brought into a claim or investigation by working with the director in ultimately what the management decision has been made. So it is key that those individuals are still covered under the policy, because if they are named in a lawsuit along with a director or officer, you must ensure that the cover is there for them. So, why purchase such a policy? Well, I have given you here an overview of some of the reasons to actually look at purchasing. Closer regulatory scrutiny and increasing transparent corporate governance procedures is potentially one of the highest exposures currently we are experiencing that ultimately are there for directors and officers and trustees of a firm. I've mentioned on my second point a key reason why to purchase the policy, and that is ultimately because being a director or officer can place individuals at a high personal risk. Ultimately, all of their personal assets are at risk. And legal defence costs are the bulk of most claims, and a suitable policy would pick up most of these costs, which can run in to the millions of pounds, which we have seen just from our experience. Without this policy, the company or the trust is left to fund the defence of a director or officer or trustee, and also the senior managers and employees, so the list goes on and on, from its own balance sheet. Now, this can be a very heavy burden on a company or trust, and a smaller trust is more likely to struggle to meet those costs of a defence, as these costs can be very substantial. Now, I mentioned earlier where these claims or investigations could come from. Now, as you can see, the sources of these can come from a considerable number of different types of events. Now, investors and shareholders, I've detailed regulators, and here I've given you just a small example of the type of regulators that you could be exposed to. Claims coming from employees are also a key and element of the cover, such as employment-related claims. For example, following a redundancy, absolutely regrettable, but it can provide a considerable concern within the D&O insurance market at the moment. Creditors, customers, even competitors have been seen to make claims. Those types of claims are where allegations may have been made of putting the sector into disrepute by way of the actions that may or may not have been taken by the directors of the company. So there we are. This is, I hope, give you a little understanding of what directors and officers liability and trustee indemnity insurance is looking to cover and why it should be considered. Now, ultimately, we need to go through the policy wording. We need to go through all the covers that are involved with policy, and we will be very happy to help you through that. If you have any questions whatsoever over these slides that we've provided you, or anything relating to that type of insurance, we at Howdens will be very, very happy to assist you. And please do not hesitate to contact me on the details provided, and we can take it from there. Thank you very much for listening, and all the very best. Take care.
Thank you, Adam. We're now going to go into Q&A to answer some common questions from CLA members. So Freddie, I would like to ask you on behalf of the audience as to whether CLA Insurance only insure big estates?
No, we do everything. We do everything from the small hobby farm right the way through to the large commercial farms and everything in between. We're very much friends to the farmer.
That's great. I've also, people may have heard rumours that the insurance market has become difficult. What's your opinion of this? And are there any risks that are currently very tricky to insure at present?
Sure, insurers are wary at the moment. They're looking at various risks long and hard and harder than others. In particular, quarries, large reservoirs, they like to have a look at long-term vacant properties, thatched properties, and some of the larger homes too. They're just looking for a little more information on these risks before they go ahead with cover.
Great, and last but not least, Freddie, if a CLA member would like to tender their insurances, how exactly would they go about it?
Then great. There's contact information, there's an email address and a telephone number at the end of the presentation. Essentially, get in touch with us as soon as you can, as early as possible. We like about 6 weeks. We realise that's not always doable. So when you get in touch, we'll do our best to accommodate as and when your insurance is due.
Thank you. Catherine, on behalf of the members, can you advise what the average premium would be for these cyber insurance policies?
Yeah, sure. So for the full policies, including the incident response, interruption, the security and privacy network, liability, you're looking at minimum premiums of around £500 to £600. But this is all based on the type of data that the business holds, especially if it's got personally identifiable information. It's also the employee numbers and the revenue of the business also.
And if the members don't have security in place on their network, on their computers, would they still be able to obtain cover from the market?
Yeah, so the security may restrict some of the types of covers that they may be able to receive, especially around the kind of cyber crime element of cover. But they still will be able to obtain cover, and insurers are actually working with clients and providing some risk management services also included within the policy and the policy premium. So that can provide online phishing training for employees, a cyber risk report, which will look at their external kind of cyber profile, which is what hackers would potentially see from the outside. They've also got toolkits in place, which will help smaller businesses put incident response plans in place. And they also provide educational videos. So, highlighting the different types of risks that businesses are exposed to. And all of that is included within the policy as well. So that suite of services is available to all policyholders.
Great. I think one type of claim that's probably a worry for most members is where they're paying a supplier and it's intercepted by a potential third party, or their emails are hacked. Is that the sort of thing that would be picked up under the cyber policy?
Yeah, so I mean, cybercrime and social engineering cover is available. What wanting clients to do more of, though, is have policies and procedures in place to be able to check these requests that, you know, they might be receiving from email requests or, you know, from known suppliers. If all of a sudden bank account details have changed, then they want the businesses to be able to have a process in place to be able to pick up the phone and just double check these details, you know, and make sure that the request is a valid request. So insurers are expecting people to do a lot more of that. You know, if they receive an email from an internal employee, you know, for transferring funds, etc., they want them to be able to pick up the phone and double check that you know, that email is a valid email before they transfer the funds, and then try and figure it out later.
Great, thanks, Catherine. One of the questions that we have from members are that many of them have a trust set up, and they've asked, will a D&O policy look to cover trustees of a trust company?
Absolutely, thank you, Esther. So ultimately, the policy would look to cover trustees, and that is the key element of the cover here, is to cover those individuals. The policy would look to extend other individuals within the policy, but the key area here is for the trustees to be covered, and we would expect them to be.
Perfect. And what sort of limit of liability should they look at considering purchasing, and what kind of premiums would they expect to pay?
Well, we can certainly look at approaching insurers with limits up to £5 million. We can look at larger limits than that by approaching a number of other insurers. As far as premiums are concerned, it very much depends on the asset size of the trust. But ultimately, if we were looking at a low-level asset trust, we would suspect that the premiums would be looking in the range of £800 to £1,000 for £1 million limit, but it does very much depend on what's declared in the proposal form and the terms and conditions that are available at the time.
Great, thank you very much.
No problem, thank you.
Thank you for watching the webinar. I hope you found it informative. If you've got any more questions, please do feel free to call the team at CLA Insurance. Our expert team will be more than happy to answer any questions and give you advice on your rural business or farm and estate insurance requirements. Or alternatively, please do get in touch with the CLA regional offices for more information. Thanks again.